Yo, listen up. Before you scroll away, I need you to understand this right now. Most people are broke not because they're lazy, not because they're unlucky, but because they never actually invest, and I mean the kind of investing that builds real wealth, the kind that quietly multiplies while everyone else is stuck trading hours for dollars. Picture this. Your friend just got a promotion and is bragging about his new salary. Meanwhile, some random entrepreneur quietly bought a piece of real estate, invested in a scalable business, and started a stock portfolio while sipping coffee on a Sunday morning. The contrast is insane. Most people think investing is risky, complicated, or only for rich people. That's the exact trap. It's not complicated. It's a mindset. Here's the 40-second truth. Your paycheck will never make you wealthy, no matter how big it is, because every cent is tied to your time, and time is finite. The ultra-rich don't just earn money, they make money work for them. Leverage it, multiply it, and shield it from unnecessary taxes, while the average person hoards their cash, leaves it in a checking account earning next to nothing, or worse. Spends it on things that depreciate instantly, like a brand new car that loses 20% of value the moment it hits the road. See the difference? One side is building assets that compound, the other side is burning time and money chasing comfort. And if you don't grasp this concept now, you're going to be stuck in the same loop 10 years from now, watching other people quietly grow fortunes while you hustle harder for the same results. Now let me break it down for you with real-world examples. A few years back, a buddy of mine named Jake, he was a software developer making a solid $90,000 a year. But he never invested seriously. He kept upgrading gadgets, eating out every night, and thought stocks were too complicated. Meanwhile, his college friend Sarah, same age, same background, took her first $5,000, opened a simple index fund, set up automatic contributions every month, invested in one small rental property, and learned a bit about dividend stocks. Fast forward 5 years, Sarah's investments grew to over $50,000 without her ever touching a single paycheck. Jake? Still broke, same lifestyle, same stress, and worse, now realizing he could have been wealthier if he started earlier. That's not luck, that's positioning, mindset, and consistent action. Another example, Mark Cuban, yes, the billionaire entrepreneur, didn't become wealthy by working for a salary. He invested in businesses he believed in, started with small moves, reinvested every return, and leveraged other people's money and talent. The common thread is clear. Ultra-rich people see opportunities. They know how to allocate capital, mitigate risk, and think decades ahead. While most people are focused on the next bill, the next paycheck, the next side hustle, not realizing that money alone is not wealth, it's control, positioning, and compound growth that create freedom. Let's be real. Investing is not some magic trick. It's about consistently putting money into assets that have the potential to grow independently of your active labor, real estate, stocks, small businesses, intellectual property, or even niche online ventures. It's all about understanding the difference between consuming money and deploying it strategically. Here's a harsh truth. Most people never invest because they are scared. Scared of losing money, scared of complexity, scared of risk. But here's the kicker. Not investing is far riskier than actually putting money to work. Inflation eats cash, salaries stagnate, opportunities pass, and suddenly you're in your 40s with nothing but stress and regret. I know it sounds harsh, but truth rarely comes soft. Ultra-rich people start small, start early, and don't wait for perfect timing. Warren Buffett bought his first shares at 11 years old. Compound growth did the rest. Imagine starting even a fraction of what he started with. The difference would be life-changing. Now let's talk strategy. Ultra-rich don't just throw money randomly. They research, learn, and allocate based on risk versus reward. They diversify across industries, geographies, and asset classes. They hedge against mistakes, and most importantly, they automate. They don't think in terms of short-term wins. They think decades ahead. Your average investor buys a stock tip from the news, hops in and out, checks their portfolio daily, panic sells, or chases trends. That's not investing, that's gambling. Ultra-rich people know the rules. They plan, they execute, and they repeat. The math of compounding is unstoppable if you respect time and consistency. Here's something even more crucial. Emotional control is the secret sauce. Most people quit investing when the market dips. They panic, sell low, and buy high again. Ultra-rich investors stay calm, buy the dip, hold the growth, and let the system work. Another real example. My friend Dave started with $2,000 in a small online business while still working full-time. He reinvested every cent, automated operations, and after 4 years, that $2,000 investment was generating him passive cash flow equal to his $70,000 salary. Guess what, Jake, from the earlier example, still hustling at the office, couldn't touch that. Mindset and positioning made all the difference. Let's make it personal. What are you doing today to ensure you're not just surviving paycheck to paycheck? Are you educating yourself on assets, creating automated income, building equity? Or are you just scrolling social media, spending impulsively, and hoping for a miracle? Because miracles don't happen in financial growth. Strategy, discipline, and consistent action do. The ultra-rich also understand tax strategy. They structure businesses to keep more of what they earn, invest intelligently to defer taxes, and leverage legal tools to maximize returns. That's why it seems like they have more luck. It's actually preparation, positioning, and execution. Let me be blunt. Every dollar you don't deploy strategically is a dollar you're leaving on the table. And time wasted doubting, waiting, or fearing risk is time that could compound exponentially. Investing doesn't require a fancy MBA. It doesn't require insider knowledge. It requires learning, action, and patience. Start small, even $50 a week in an index fund, a few hundred on a micro real estate. Investment, small ownership in a scalable online business repeated consistently, compounds over time, results become unstoppable. The key takeaway: ultra-rich people treat investing as a habit, not an event, a system, not a gamble. They understand the math of compounding, the psychology of delayed gratification, and the power of owning pieces of assets that grow while they sleep. Your average person treats it like a lottery ticket or casino game. They check prices obsessively, react emotionally, and end up poorer. Now, if you want to avoid being the average person, the action is simple but requires discipline. Allocate money consistently, automate the process, educate yourself, focus on assets, not liabilities, track your progress, and most importantly, start today. Don't wait for more salary, a bonus, or perfect timing, because time is the multiplier of wealth. Remember, small steps repeated consistently beat massive moves done occasionally. Every week, take action. Invest something, learn something, and track something. That's how the ultra-rich consistently grow power and wealth. Not by luck, not by magic, but by applying these simple principles relentlessly. And if you're watching this right now, make a choice. Do you want to stay average and chase a paycheck? Or do you want to start building power, assets, and real wealth that compounds over time? And if you want more videos like this every Wednesday and Sunday, showing you exactly how the ultra-rich think, invest, and build unstoppable wealth, make sure you smash the like button, hit subscribe, and turn on notifications so you never miss these high-impact wealth strategy breakdowns that can change your financial future